Welcome to the Mortgage Update with Dan Frio, and this is the calm before the potential storm. So what I mean by that, basically the market was flat today. Here's our number that we monitor every day if you follow the channel, and it's zero. So what's going on tomorrow? The big buzz is, well, the Federal Reserve is reducing rates. They're most likely going to cut the federal funds rate by 25 basis points, which is 1/4%. And I'm going to explain a little bit of that here in a minute. But the biggest thing of what's coming out tomorrow is when they come out and read their notes on what they perceive to happen in the future. That's what we're gonna look at, and here's why. Here's how all of this works. Okay, the best analogy I can make is, let's say, for example, Apple. Apple comes out and they say, our next quarter, we expect our next quarter revenue to just blow the doors off. So what happens to their stock that day? Well, does everybody wait until they post their earnings to then buy the stock? No. People start jumping on board that day the news comes out. Okay, so the news came out that they expect record earnings, and then it prices all the way up. The stock runs all the way up, or most likely all the way up to the day of the earnings that get published. So up until the day that earnings get published. What happens on that day? Well, a couple things could happen, I guess. Is one, they come out and they match what they said. They said they were going to blow out the quarter, and they were going to, their revenues were going to be up 50%, and they come out and they say revenues are up 50%. Well, what happens? Well, the stock drops. Why? Well, because people are taking their profits and running. They've already, the price has moved up all the way up. They came out with the news. News was as expected, and they're like, okay, well, I'm going to take my money and run, put it somewhere else now. Okay, so that's one. Or they come out and say, what, our earnings only were 10%. Well, they expected 50%. The stock reflects the 50%, and all of a sudden the stock crashes because of that. Okay, so the next thing is they come out and they meet expectations. But then they come out and say, you know what? We even expect next quarter's revenue to be even better. Well, then what happens? It doesn't drop from profit taking. It keeps going up again because people are taking their comments and their forecasts and saying there's going to be record earnings again. I'm going to keep riding this thing. Okay, the reason why I said that's exactly what's going on with today's rates. So the Fed came out a couple weeks ago and said that they're going to reduce rates, okay? And they're going to monitor some things. So the bond yields and everything played tune to that. Mortgage rates came down and everything played into place, okay? So that's the news. Tomorrow is the day that the information comes out. So if they come out and they reduce rates by 1/4% like they said, you probably won't see anything. You might actually see rates go up a little bit, okay? However, what is their estimates, or what is their forecast going forward? All right, so that's, again, that going back to the Google stock. Now, what's the verbiage? If they say, you know what, we're going to continually monitor this and most likely keep easing, well, that's your trigger of saying rates are going to get better. So rates are going to drop again on the news. Okay, so I hope you follow my analogy here. So what would be bad to happen is they come in tomorrow, they drop rates 1/4, and then they say, you know what, economy's kicking along, everything's perfect, we're not going to do anything, we expect no more rate decreases or no more rate drops. You're going to see rates jump. So that's again, going back to the analogy, you kind of trade into the news, and then the day of the news, you react. So tomorrow I'm going to be sitting here, not answering any phones or not doing any podcasts or anything, and I'm going to be watching what's going to go on and what the Federal Reserve comes out and says, because that's going to be a big market mover, possibly. So my suggestion would be cautiously continue to float, but very much watch what's going on into the market tomorrow. So then what happens is, let's say things go one way or another extremely. So let's say rates, they automatically take a jump. I have the ability, these charts here give me kind of a crystal ball into things. This is real time what's going on. So I know instantaneously what's going on with rates. So let's say, for example, you have one of these extreme days where we went from here to here, a big volatility day. What happens is the banks the banks are doing this as well. They're watching this. Now all of a sudden they see rates take a jump. So by the time they do all their things behind the scenes, do this, publish this, and do this, and post or repost their interest rates, I, in the background, have already beat them to the punch. So I see rates spike on my charts. I go in and lock your rate before that rate adjustment. So let's say, for example, I know rates are going to pop from 4 to 4.25. Because of my crystal ball here, I jump in and lock you at 4, and we're locked in. And then if those who waited another 20 minutes, then they react, they're at lunch or they're really not watching this, they go in and they come back from lunch and say, oh, I got to lock that loan. They go in, they got 4.25 where I got you 4. What do I do different? That's what I do different. So I hope this all makes sense. I'll try to go through it with charts one day and kind of, show you exactly what happens. But again, the news came out several weeks ago. Rates have come down dramatically from that point. Tomorrow is is D-Day. They're going to tell us, hopefully they come back with a 0.25% drop in rates, the federal funds rate. I'll explain that maybe in tomorrow's video, but it's not the mortgage rate. So hopefully all this made sense, but today was a dry day. Tomorrow's going to be a big day for interest rates for those in the real estate market, mortgage people and realtors. So stay tuned tomorrow. I'll probably post midday when the Fed comes out, and then I'll give you an update at the end of the day. Take care. Please don't forget to give me a thumbs up. If you would, please do me a favor. Subscribe down below. The more you subscribe, the more people that get to see this, and the word spreads. I'm not asking for anything of you other than just watch the video. So thank you again. God bless. Have a great day, and I will see you tomorrow.